Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that buyers pushed ES to another new all-time high. And heading into the open, our bias is going to be short-term bullish as long as ES can hold above 98 to 2000. But if this market is truly strong, then ideally we want to see AES holding above 0.3 quarter to 0.5 quarter. So even a break below 0.3 quarter to 0.5 quarter would actually be a signal of short-term weakness because, again, if this move is really going to sustain to the upside, then ideally you want to see the market holding above 0.3 quarter to 0.5 quarter, and a break below it would be a red flag and just a early warning sign that perhaps the market is not as strong. But 98 to 2000 is the line in sand, and the last spot where buyers can defend. And if that zone doesn't hold, then we can actually get a liquidation move down to 91 quarter to 92.75 and 87 to 89. So heading into the open, we're still giving edge to the buy side as long as the market can hold above these zones, but with the idea that if the support areas start to break, then markets like this where you see a big move in the overnight session, but it can't really sustain. A lot of times when they start failing, then they can go bigger the other way as well. So, we just have to keep that idea in mind and be flexible enough to switch our bias intraday if the market starts to break lower. We are seeing some pretty decent volume here, and that can result in a better range on the day time frame. So as long as that volume sustains, we can get a better range to the upside or downside. By default, we're giving edge to the upside scenario. And, on the upside, we can quite easily make a new high and tag 14 quarter to 16 quarter. But even considering that zone, we do have to realize that ES is at all-time high, so there is no hard resistance on the upside. So if the volume remains relatively high, then the market doesn't have to stop at 14 quarter, 16 quarter, and we could be heading higher. Now up at 18 half to 20 half, that's an area where, given the recent volatility, I expect the buying to shut off, and that's an area where the range could be short-term exhausted. So that resistance zone is a bit more solid than the 14 quarter area. So keep that idea in mind as well. So, heading into the open, we're going to be watching whether ES can hold above 0.3 quarter to 0.5 quarter. That's going to be the primary focus. If it starts to break lower, then, the bias is a bit more neutral, but with the understanding that 98 to 2000 can still hold and buyers can still maintain control above that zone. So, longs can still work above 98 to 2000. On the upside, as long as we hold 0.3 quarter to 0.5 quarter, the target is going to be a push above the overnight high, and if we break the pre-market support zone, then perhaps we're not going to make a new all-time high or above the overnight high, but we can still get up to 0875 to 1075 during the day session. And then in the event that we start breaking lower, then we'll actually flip our bias and start focusing more on short setups below 98 to 2000, targeting a move to yesterday's low 91 quarter to 92.75, and potentially 87 to 89 depending on how the market is shaping up in real time. But overall the market has been bullish, and for that reason we have been more active on the long side, and that's going to continue to be the case until the market shows us that we're getting a bit more weakness than expected. So those are the main thoughts heading into the day. Let's see how well the buy side holds up, and we'll take it from there.